What's going on, traders? Sandra O'Connell here with Pristine Capital, coming at you with yet another market recap video. It's February 16th, 2022. Today we're going to talk about the wild market action. We're also going to talk about some of my trades for today. Before we dive into all that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. So what were our big catalysts today? We had two different things going on. The first was the Russia and Ukraine catalyst, that Russia is going to go ahead and invade Ukraine. Our administration told us a few days ago that Wednesday would be the day that they were going to invade. So we had that looming over the market. And the other thing that was looming over the market was the Fed minutes out at 2 p.m. So what were the results? What happened today? We had a day of mixed action, and I must say, within the context of what we saw yesterday we had a great day across the board. All these indices were up, 2%, up 1.5%, up even more than that. Fantastic days. So a day like this, where we just kind of traded flat and we had a mixed board, this is actually the perfect kind of day to get after a really nice move to the upside. S&P 500 finished up 0.11%. We had the NASDAQ QQQ, which was on the lows, down almost 1.5%. Finish only down 0.03%, basically flat. Small caps were positive. And one of our Pristine Capital members brought up the small caps as a potential trade idea. I ended up taking the trade, and it worked out very well. We had the Dow Jones down 0.16%, and we had the ARK Innovation ETF down 3.2%. Volatility contracted in all of these indices, and you can see that most closed in the upper end of their day's range. Breadth was also mixed. We had positive breadth in the SPY and the small caps, and we had negative breadth in the Qs and the Dow Jones and in ARK. So this was definitely a rotational kind of day, and definitely just a mixed bag across the board. All right, so we had our Fed catalyst, and these were my thoughts heading into the Fed. I posted this at 8:42 a.m. So I said, I don't see the Fed minutes being a big negative catalyst today. The Fed minutes, they're a look back at the last Fed meeting. And this was really the kicker that a lot of people completely missed. And I think if you weren't aware of this, you probably had a rougher day trading. I have here, since the last Fed meeting, we got a hot CPI print and a hot PPI print. Both of those got really negative reactions by the market. The Fed speakers, Bullard specifically, adjusted to an even more hawkish stance. So we had the Fed meeting. Fed speaker said XYZ. Then we get negative catalysts, and then the Fed came out and they had updated commentary that was even more hawkish. So I said, I can't imagine the Fed speakers being more hawkish, having more hawkish rhetoric back then than they do now after seeing that data. So I essentially knew this Fed minutes catalyst, it's probably not going to mean anything. Literally, we're getting stale data. The Fed got more hawkish since that last meeting. All right, so Finviz heat map, what ended up happening today? So basically, we ended up having a huge red day in the beginning of the session, and then the market just kind of chopped around for quite a while, for several hours. And then once we got that Fed catalyst, then the market zoomed to the upside. So if you're sort of aware of those dynamics and how these Fed days play out, you can capitalize on that with some nice day trades, and that's exactly what we did. You can see Apple closed down 0.14% after having a really good day yesterday. Microsoft down slightly as well. We had Google, Amazon, and Tesla close in the green. I actually day traded Tesla today. I had a nice winner there. PayPal still red, Facebook red as well. So yeah, mixed bag. And you can see a lot of these semis are pretty much red. Let's take a look at some of those semis and how they did after reporting earnings. Let's check it out. So we had Nvidia report. And this was another catalyst that could potentially derail the market. I must say the market also passed this test as well. Nvidia is trading down at 259.56. It's down about, what is this, 2 or 3%. That is such a mild move. Like literally, that's like a regular move without even having earnings for Nvidia. Like Nvidia was up 7% yesterday. So this overall a nothing burger report. I know a lot of people, they'll be like, oh my gosh, Nvidia's down, this is horrible. But yeah, it's for an earnings reaction, this level of a reaction was baked in by the options market makers It's within today's range. It's within yesterday's range. So yeah, really just a nothing burger on that earnings report. We also had Applied Materials. They reported earnings as well. And Applied Materials is actually trading up, maybe 3%. So again, a positive 3% move or a negative 3% move, that's not really going to do anything to derail or really boost the market either way. Let's take a look at these indices. So what do we have? S&P 500. My trend model closed at a +3, which is great. Throughout the day, it was kind of oscillating around. And then what else do we have? Our dark index. Another elevated day of dark pool buying. And a few days ago, I was getting a lot of flack for posting this dark index and really just for using it as part of my process. But this thing, sure enough, the market is being accumulated by the dark pool buyers, and the market just doesn't seem to go down. For most people, they're like, why is the market not going down? But we use a data science approach. Basically tells us, hey, the odds are pretty good of an advance when these dark pool buyers are accumulating. So we closed above the 20-day moving average, which is great. And take a look at this. This is huge. This is our weekly value area. And yesterday, even though we had that nice advance up, we just couldn't break into it. Overnight, it looks like we had a little move to the inside that got faded. But here we are again back inside this weekly value area. We have options expiration on Friday. And I think a logical upside target into that options expiration is this 44.92.25. So that is my target. If we got there, I'd be super happy into this OPEX. A lot of times options expiration week is just very choppy. And I'd say so far we're actually getting decent directional moves. Let's take a look at our Dow Jones. Or not the Dow Jones. Let's take a look at the NASDAQ first. Dogs of the Dow are always last. NASDAQ basically closed flat, also held on to this 20-day simple moving average, which is huge. Russell 2000. This one ended up having a good performance today. So I saw people posting like bear flags on the IWM small caps. Ended up putting in a doji after a great candle yesterday. Then the Dow Jones. You can see this one put in a bit of a red candle. Basically finished flat. Not too bad. Dogs of the Dow not really interested in that group. The VIX. VIX took a hit, and this was crucial as well to realize. This was another divergence that we pointed out within our group. Hey, the VIX is not really elevated, even though all of these indices are trading to the downside. So that is getting me a little bit more positive on the market. And so sure enough, we ended up having a nice move to the upside. And let's take a look. So the VIX is now well off the highs, which is great. Could we get all the way down to 20? Certainly could happen. Now let's take a look here at our sectors and style factors just to get a better feel for the composition of this rally. Sectors, let me flip this. There we go. Sectors. So we had the MSOS Cannabis ETF, which is in our #1 momentum slot, up 0.36%. Gold miners are having a nice run as well, up 3.2%. We have energy, which finished up 0.81%, and KWEB, our Chinese internet fund, finished up 0.19%. We did have some losers as well. The innovative tech names were down 1.47%. The ARK Innovation ETF was down 3.2%. So it looks like we had a mixed day. A lot of the more speculative areas of the market did actually decline after posting really good gains yesterday. And then our style factors, we had the high beta style factor finishing up 0.76%. So that's pretty risk on. And then what else performed well? Cyclicals were up 0.38%. So very risk on style factor configuration. All right, let's take a look here. We'll pull up my trades for the session. And let's take a look. So this was my one trade that did not work out today. So I put on Roblox specifically to hold through earnings. And I figured, hey, I'm not going to trade this one via options. I'll do it via common stock, which just ended up being a lot safer. Roblox ran into the print, and I did take a target on my Roblox exposure. But Roblox ended up having a not so good earnings report, and it really just ripped to the downside. So I closed this one out for 58.01. I had paid 68.10 for this one. And this one, it was really just part of the game plan. When I entered this position, I was like, hey, this one could move up or down, but a lot of these growth stocks, they're so beaten down that they're having nice moves. I'm going to enter this one knowing that it could drop down to this level. So yeah, basically the results, I got what I was expecting, because I was expecting a big move either direction. It's always great when you put these on and they just work out, in your favor the way you'd like them to. But this trade I definitely handled like a pro. Basically what I mean by that is I took off a target before we even got into the earnings report. And I think in hindsight, I probably could have closed out even more of this just for prudence. But that's definitely something I would do in the future. Probably just take a bigger target here. But yeah, then the other thing I did that was, the right thing to do. My intention for this one was to hold it through the earnings. The earnings were a disappointment, so I closed it out immediately on the open. One of the worst things that you can do is you enter something for an earnings print. The earnings print comes out negative, and then you go, I'll hang on to it. It'll probably come back. Yeah, you don't want to do that. So this one did not work out in my favor, and that's okay, because it was basically what I was expecting could happen. Now, moving forward in the future, as I log my trades and as I do my own homework, these earnings trades for me, I just noticed don't really have a big edge. So I think for these, am I going to do another earnings trade, for a while? No, I'm not going to. This was really like a shot. Thought that maybe there was an asymmetric opportunity, and there definitely was, because you could see some of these names like Upstart had a great reaction to earnings. This one was up 35%. But yeah, I think for this trade, I executed it well, but I don't really think there's enough edge to really use it as a reliable trade. So you live and you learn, and I just moved on from that one. So the best thing about today was, yeah, I did the right thing. I rotated my capital out of this losing name. Then I ended up having a bunch of successful day trades, which was good. So I got long the Tesla February 18th 920 calls. Took those on for $13.70. Also, so this was funny. Intraday, there was this headline, and it was Russian and US planes fly dangerously close to each other. And the market really spilled to the downside. I ended up getting long some IWM when we had that big dip. So take a look here. This was at 1236. So if we go to like the 5-minute chart. So 1235. Yeah, I got long basically into the bottom here, which is great. So I got long the IWM, and I was able to ride this higher, which is great. Let's take a look. So yeah, Tesla hit out of half of it for $15.30. I paid $13.70, and then I hit out of the other half for $17. For Tesla, I wanted to just make sure that I was selling it into strength and making sure that I didn't get too greedy when we had this nice move from the Fed minutes. So yeah, this one, take a look. This one could be setting up very well into tomorrow as well. Closed decisively above this 20-day moving average. Look at the hourly chart. So I pretty much closed right as we were hitting this weekly point of control, right around 925 spot 61. So yeah, this one ended up being a good day trade for me. That's the thing, like if I had been stubborn and like, let me keep this capital on Roblox, it's gonna come back, I wouldn't have been able to take that Tesla trade. Same thing with IWM. I entered these February 18th 204 calls for $2.49. Closed out part of my position for $2.74. Closed out more for $3.05. And then I left a few contracts on as a runner. So depending on how tomorrow goes and Friday, these remaining contracts, these could end up becoming like a double, or they could basically go to zero. So I left on a nice runner for this one. And then I did take some of these winnings over here from these options trades, and I added to my KWeb position. And KWeb, I'm just noticing, this thing is basically asleep right now. Check out KWeb. And I just have this feeling, doesn't mean it's going to happen, but I think these Chinese internet names, at some point, they're going to have like a 10% up day. And I think everyone will be like, oh my gosh, this is crazy. And like everyone will jump onto these names. But look at what they're doing right now. So they've been basing out for quite a while. The volatility is really contracting. We made this low here, and we've made subsequent higher lows. We're above the 20-day moving average. Now we're above the 50-day moving average again. We're below this monthly value area high. So this one is giving me a lot of green lights. And we have this target up here at 40.15 and a target up here at 44.43. So I just figured, hey, I'm going to go ahead and add to this position because this is one of my A+ setups. So those are my trades for today. Let's take a quick look and we'll check out our options order flow. See, I know a lot of people are getting very confused in this market, and I think the people that are getting the most confused are the ones that maybe they don't really know how to understand a lot of these catalysts, because really, like, this market is very catalyst driven. So I think it's a lot of price action guys that maybe they don't have much context and they're having a tough time with that. And then people that are trying to buy into strength. If you're buying into strength over the past couple of months, it's a really challenging environment. A lot of times you have to either buy into the weakness or buy after there's a dip and the market starts rotating higher. Let's take a look. We have some SPY flow. Tesla. Okay, so SPY was in the lead again. Let's take a look at these, at our matrix here. It's SPX. A lot of flow with this 1,000 strike. It's kind of odd. Yeah, definitely a mixed bag. Tesla. A mixed bag of puts and calls. That's exactly what we want to see. SPY. A lot of puts going up. So I just know, like, there's a lot of people out there that are just really convicted that the market has to go down. It can't go up. And they continue to just layer into put options. And for economic reasons, this market has every reason to go down. There's no reason why it should be going up. But for market structure reasons, there's a lot of reasons to think that the market can go higher. Same thing with the Qs. A lot of puts that were purchased today. Nvidia looks like a lot of people loaded up on calls. Likely there's going to be a big time premium burn there. And we have Apple, mixed bag, but we can see a lot of calls being bought. That about does it for today's market recap video. Hope you all had an awesome session, and I will see you all tomorrow.